Ireit Global is one of the REIT that has its share price beaten down and not recovered yet, similar to most of the Singapore REITs. While SIA's recent results might hint at a drop in dividend. So let us get straight into their results, and the first will be Ireit Global. Ireit Global is an overseas REIT that contains properties only in Europe. They have 76% assets in office while 24% assets in retail. Majority of their assets is in Germany, and for overseas REITs, one of the main factors to consider is the currency risk. Dividends given to shareholders in Singapore will be in Singapore dollar, and if euro dollars weakens, the amount converted back to SG will also be lesser. They have 53 properties, with Germany properties being the larger assets. However, one particular asset to take note later is Berlin campus, which I will explain why later. Looking at this quarter, their occupancy is at a decent level of 89% with leverage ratio of 37.7% and a good low interest debt of 1.9%. For REITs in the high interest rate environment, it's important for them to hedge the cheap debts so that they can refinance when the interest rate is lower. That is what Ireit Global has been doing with 97.1% of the borrowings hedged. This is why their average interest rate is only 1.9 times and will only need to refinance loans at January of 2026. However, with the negotiation ongoing for the repositioning of the Berlin campus, this might increase their finance costs. If you are new to the situation, the management will be revamping the Berlin campus, which will definitely bring in higher income. To see how attractive this asset is and how low the rent was, the tenant extended the lease back in 2023 July with 45% higher in revised rentals. On top of the higher rentals, the tenant even paid a lump sum of 15.5 million euros, which is equivalent to 16 months of the rental. So because of the extension, the Berlin campus will only be vacant and redeveloped after December of 2024. Moreover, there are already tenants that have agreed on a long-term leases even before the reposition is done. This shows how attractive this asset is and how tenants do not mind agreeing to the lease ahead of time. But with this repositioning, what is the problem here? With Berlin campus under reposition, this would mean that potentially 20% of Ireit Global's income will temporarily cut off for Ireit Global's next few years' income. The refurbishment of the Berlin campus is expected to begin in the second quarter of 2025. The total project cost is around 42 million euros. With Berlin campus being so attractive, refurbishing this asset will be able to bring in even more income for the long term for Ireit Global. However, in the near term, dividends might drop as much as 20% due to this refurbishment. One risk to take note is that if there's any potential delays in the approval or the refurbishment of the property, this will hurt shareholders' dividend during this period. So for next year, we should expect their dividends to be lower. At the current share price, the dividend yield is about 10%, which we should expect it to be lower next year. The next company's earning that we'd like to talk about is Singapore Airlines. You can see my previous video here where I elaborate more on their business. Going straight into their earnings, we can see the main problems here. The growth in the revenue is slower than the growth in the expenses. This led to lower profit of 48.8% year over year. Lower profit is never good because this would potentially mean lower dividend as it's not sustainable for companies to give up the same amount of dividend as last year with 48.5% lesser in profit. If we see the individual businesses, it's not looking good as both SIA and Scoot are experiencing sharp drop in operating profit. Like I've mentioned in my previous video, as the tourism stabilizes after the COVID hype and competition builds up, SIA will have to lower air ticket prices. Moreover, with the increasing fuel costs, this ultimately led to lower profit margin for SIA. If you look at this slide, the fuel cost is still going up significantly. Non-fuel expenditures such as staff costs also went up by 12.1%, which is expected as they have to hire back the staff to fly more flights. Even though revenue is up year over year, it was boosted mostly due to cargo revenue. We can see that the passenger flown revenue actually dropped 0.9% year over year, which might indicate the peak of the revenue. RASK, which is revenue per available seat kilometer, is a very important parameter to see the revenue received per seat. Unfortunately, SIA continues to experience drop in RASK, which is contributing to the lesser profit. Problem with airline companies is always their expenditures. Not only is the staff and fuel cost a problem, the passenger costs and parking of vehicles are contributing to higher expenditure. As they get more planes, the maintenance costs and parking charges will definitely increase. Operating profits continues to drop for SIA as Q2 was even lower at 325 million with a drop of 59% year over year. This chart again emphasizes on the expansion in their expenditures outweighing their growth in revenue, thus causing a 48.8% drop in profit year over year. If we see their financial sheet, even though dividends was maintained at 10 cents per share for the first half compared to last year, their dividends paid actually went up from 832 million to 1.1 billion. This is common for companies that have share dilutions, and this meant more money have to be paid in order to maintain the same amount of dividend. Another problem is the capital expenditure on airplanes. Airlines needs to keep improving or change their planes, therefore they have to constantly spend a lot of monies in order to maintain them. We can see that for the next few years, aircraft expenditures might be very high and this might potentially lead to lower profitability. Problem I have with their expenses is that it may not increase the company's profit, which is bad for shareholders. In the earnings call, questions were asked regarding the forecasting of the aircrafts. One times Airbus A250 was expected to come in, but for Boeing 777-9S, there were already multiple delays and there was no update on when it can be delivered. There was only expectation that it will only be in 2026. Considering recent Boeing issues, I feel that this might be a risk for potentially more delays. So therefore, what can we conclude from SIA's recent earnings? Revenue is growing up, but the main negativities, from the maintenance costs of the planes to the fuel costs, and lastly, competitions from different airlines, are causing the drops in SIA's profit. At the current share price, its dividend yield is about 7.45% with semi-annual dividends being paid on August and December. With the large drop in the profit, I feel that their final dividends will be expected to be much lower than last year's dividend of 38 cents per share. Thank you so much for watching. If you agree or have any opinions, do leave a comment below on your thoughts on Ireit Global and SIA earnings. Please support the channel by hitting the like, subscribe, and you can also watch my previous analysis on the Reits that performed well this quarter and why Singapore bank stocks continues to thrive in this high interest rate environment. Thank you, and I'll see you in the next video.